All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I know I said I wasn't going to get on video here this afternoon, but we have 8 signals on the board, 8 bullish signals on the board right now. So lots to do here with that. So let's get started. Let's go take a look here. Intel, see if we have to do anything here with that. Option is 337, and then with Chevron, the option is 315, so 337 and 315 here. We have those logged in, and let's see, something is not calculating correctly here. All right. That's why it doesn't look right. There we go. It's like we're missing $1,000 in gains here. Let's get that 1,000 back. There we go. All right, we have that 1,000 back. Spreadsheet error. But here we are. We're sitting with 12.5 in gains, and running strong. Nothing to do here though with Intel or with Chevron. Neither at their time stop, neither at their price target. Price target here on Intel is $49.98. The stock is just a little shy of that here. Let's see where it's sitting right now. 49.71. So it's shy of that, and so going to hold Intel here over the weekend. Now, the new signals that are on the board. Okay, entry triggers. We have bullish signals in on Target, on Caterpillar, Honeywell, Whirlpool, Juniper, Boeing, and CSX. Oh, and one last one, 8, JD. Yeah, that's a lot of signals. We've had some, days where we've had a lot of signals. We had one day right up here. The other day we had 3. Interesting enough, this morning, Goldman Sachs came out and called Chevron and Conoco the 2 best oil stocks in the market. Interesting. But, how do we go about this? How do we go and trade this? Well, since we're coming up on earnings season, we do have to take a look at the option values. You take a look at something like a Honeywell. The spread on the options is just ridiculous. It just isn't tradable. The spread's just way too nuts. And, I'm not going to go through each and every one of the stocks here with you and, go through, what's wrong with it or why I'm not going to go trade it. But Caterpillar, Boeing, CSX, Honeywell all have earnings. The options relative to the ATR, they're just not that great, with those. So I'm not gonna run with any of them. Not because they don't have earnings, but because I have other options, right? And if the only thing on the board were CSX, I'd go trade it right now. But with other things being on the board, I don't have to. Juniper has a bullish signal, but we're already in Intel. It's about the same trade. So I'm not going to go with Juniper. So we'll put Target, JD, and Whirlpool through the sorting method. Whirlpool options, not all that great here with it. They're not horrible, but they're not in what I would call the fantastic area there with them. Target options here are in a pretty good spot. They are definitely in a good spot here. About a 50-cent delta, though, on them. You see the implied volatility is really low, but Target's a stock that definitely knows how to move. We need about a $4 move to double the money on those options, right? And if we come in and we look here at Target and the ATR, where that sits, we can see the ATR is about $1.70, so a 2 ATR move is about $3.40. So it's in a pretty good spot there in terms of the ATR and the setup. And then there's JD, which is a nice setup here, but earnings are priced into the options, or we have the earnings date on JD. Now, this is one when I looked at the options were still compelling. August 9th is when the earnings are. But again, that's not going to say, hey, don't make the trade. If the options are still compelling, definitely worth going after. And these 30s are going for about 220 with a 65-cent delta. So we need a $3 move for a double there with JD. The ATR is about 90 cents here, so we'd be looking at about $1.80 of pulling some off. So not quite a double. It's not as compelling as Target is from a reward perspective. And both of them have, JD probably a little less risk when we look at it immediately, but JD does have a little bit of the gap risk. But Target and JD both filter out through the sorting mechanism, exactly the same. So, bottom line, gonna run with some Target here and go trade some Target. So let's come in here to option ticker Target. We're just gonna go by the August monthlies here on Target, and they're the 87.5 strike. And Target, if you've never traded it before, it knows how to move. It can move 60, 80 cents in a blink of an eye and for no apparent reason. So if you're one of those traders that you need a reason for every single move, Target is not the trade for you. Let's see here how much I want to put into this. Let's go 16th of August. 16th of August, 87.50 calls are what we'll be looking at. Let's go with 10. Should we go with lucky number 13 again? I know that's a little bit lower than what we should allocate compared to what the spreadsheet tells us, but is right in line with how we've been allocating things. There we go. So 240 on 13 contracts here. Lucky number 13, $2.40 on the 16th of August, 87.5 calls here for Target, and filled on that at 240. Okay. All right, let's go. Let's go fill in the spreadsheet and make it happen. So we have Target. And today is the 12th, 7:12 p.m. 16th of August, 87.5 calls. Option price 240 on 13 contracts. Stock entry price here on Target. We're within seconds, so I'm just going to pull what it is now, 87.71 with an ATR of 164. So 87.71. Right, 87.71, and a price target here an ATR of 164. All right, so that's going to give us our exit level of 86.07 on a loss, 90.99 on a 2 ATR move. Current stock price, we'll load that in here again. 20-minute delay, as it is, Google here. And then the exit will be the 17th. So 7:17 p.m. for a time stop there, and 7:19 for the green time stop. Hopefully you're getting the feel of how these go, and how these are, populated. It's rather simple, but it does take a little bit to understand initially. And there we go. So we are good to go here with Target, and I'll even get it so it populates when Target makes a change. There we go. All right. Easy enough, right? Easy enough. So not a whole lot of decisions to be made. Yeah, some things going on out there, but fairly, fairly simple. One of the things I really like about this approach, right, is the concept or this idea of, well, here's Intel, right? It's up, it was leading the Dow or something like that. It's up 2.5%. Do we really care why? Do I have to go out and go, well, it's getting a little far from the 7. Should I take it off? Well, it just broke the 200-day moving average. Well, entering it, we entered it below the 200-day moving average. Yesterday, it was stuck at the 200-day moving average. Did it matter? No, it doesn't, right? A lot of just some of the, well, a lot of the, analysis that traders do put into two trades, with the algorithm is absolutely taken out. It's absolutely taken out. And it does lead to things like a Disney or an Under Armour. Both of these, when I got out this week, I said, I hate getting out. They're going higher, right? And we have seen that happen. Under Armour having a great day here today. We're going to have more Disneys and Under Armours, right? But, if you go back and you look at the challenge, we're also going to have a lot more J&Js where, the day we got out on our time stop, the stock tanked. Right, a Boeing, right, where it get knocked out on the time stop and the stock tanks, it just comes down to playing the probabilities, right? Playing the probabilities, and right now, had we ignored time stops, right? Had we ignored time stops, we would have a bigger win on 2 trades and a bigger loss on 4 trades. But had we ignored the time stops, we'd never be in a position to be trading where we are right now. Doesn't necessarily help take any sting off of exiting a trade just before it moves up. But, as I've mentioned, this is a process that is not going to be fun for the top pickers, not going to be fun for the bottom pickers, not going to be fun for those that want to optimize each and every individual trade. It's a process, and it's a process that is, turned $3,000 into $15,000 in 45 days, and it's a process that if it repeats on that rate over the next 45 days, we're up over 75, 80 grand in terms of challenge value, right? So, it's definitely on the pace I want to see. Definitely on a very strong pace, and it is a process that I will absolutely continue to run with. Disney, Under Armour, be damned. Okay, all righty. Well, thanks for hopping on. Have yourselves a fantastic weekend, and we'll talk to you Monday. Take care.